Welcome, everyone, to a Dose of Wisdom Real Estate podcast, where you get your daily dose of wisdom on all things real estate related. I am your host, David Stein, and today we have the privilege of having on our show Andrew Abernathy. Andrew has achieved extraordinary success in the real estate sector. He started investing when he was still in high school, and now into his 20s, he has amassed an over $200 million portfolio. Andrew launched Abernathy Holdings in August of 2012, and currently his investment strategy is to focus in developing self-storage facilities across the United States. Andrew, thank you again for coming on the show.
Thank you. Really appreciate it. Looking forward to it.
Okay. So my first question to you is, what is the backstory to how you got involved in real estate?
So grew up on a family farm. Actually, my brother and I are fifth generation. My brother runs the farm I'm more passive. But anyways, that started back in 1901. So, real estate's kind of always been in the blood. But up until 2009, when I started Abernathy Holdings, it was mostly agriculture, farmland. In 2009, I wanted to diversify a bit. So I just kind of tried a little bit of everything, in my 15 years of ripe old age of 15 years old, you could say. Apartments, retail, I had a HUD building at one point, so just a little bit of everything. But eventually we found self-storage and made that our focus.
Okay, great. So you were involved in a number of different types of ventures, and then you kind of narrowed in on real estate. What compelled you to narrow your focus to real estate?
Yeah, good question. So, back when I was, 10 to 14 years old, and still today, Warren Buffett is and was a huge mentor of mine. And he was more involved into the operating businesses. So naturally, I was following in his footsteps. I took largest position in an insurance company in Alabama there for a bit, trading on the NASDAQ. We bought outright an equipment manufacturing plant dealership in Great Falls, Montana. So anyways, doing a little bit of that, our returns were good, but every time I did a real estate deal, they were always extraordinary. And so by 2017, I just said, I might as well just focus on what has been done the best. Both were good, but real estate was always the best.
Right. Okay. So one of your ventures was a insurance company, and from what I understand, you managed to get exemption to get on the board. So that's a fascinating story. I'd like to hear that.
Yeah. So Warren Buffett loves insurance companies, so you can manage the float and invest in various things at affordable rates, assuming your underwriting is competitive. You're right. As long as you're not losing money on that, you're able to hold that float and invest it for a very affordable price compared to bank interest. And so with that being said, I was looking through different companies on the NASDAQ and macro cap companies, right? And 50 million or less. Because I knew that in order for me to take a large position at the time, because at the time, Abernathy Holdings was probably only worth like 15 to 20 million. So I knew to take major position in it, it would have to be less than 50 million market cap. So I found a company out in Alabama, family owned, started in 1947, and it was selling at a discount to book value. Most insurance companies sell at 100 to 120% book at this time, and I was scooping shares up for 50 to 70%. Due to my volume and trying to acquire a large chunk of the company, it took a few years. So I was just buying stock when I could. And then I started going to the annual meetings. And then after I hit a large ownership position, similar to the founding families, I said, I'd like to be on the board. And they said, we're open to it, but, there's a bylaw that says you have to be 30 years older in our bylaws, which we can change that. That's easy. But there's a state rule that you have to be 30 years or older to be on an insurance company board. And so my next question was, well, how do I change that? And then that's how that all started.
Right. Okay. Quite impressive.
Yeah.
So you've had phenomenal success in raising capital for your ventures. What are some tips you can share with our audience on effective capital raising?
Yeah, so I started out, it's really about timing. So the first 10 or so million I raised was back around our farm and a lot of neighbor farmers. And farming at the time and oil boom was in the area. And farming was probably the best it's been in 50 some years. So the timing was right. So I
Right.
went and raised a lot of money there. And then I pulled back and then raised some money here and there. But then when COVID hit and all these stimulus checks and everybody in the world that I knew that owned a business was getting all this money, I looked at my partner and all of my guys and I just said, hey, if we're gonna raise money, let's do it again now. And sure enough, we raised like I don't know, 30 or 40 million dollars in 6 months. And then the biggest win for us was getting Gary Tharaldson, the North Dakota billionaire, getting him involved with us back in
Right.
2017. So he's our partner as well, which helps. And so we've just kind of slowly organically grown it. I looked at using placement agencies to help me raise capital. I realized that the only person that could tell a story as good as me, and
That's
that's
great.
really raising money. It's a story. They don't invest in a product; they invest in the person. And so when they see your passion, your drive, your track record, make the deal a win-win for each side. The money is just the what comes after all of that. So
Right.
I was good at that apparently, and it was a lot of fun while I was doing it.
Okay. So you've raised and contributed from your own funds to fight human trafficking through Abernathy Foundation. Can you tell
Yep.
us more about that project and why it speaks to you?
Yeah. So I've learned that giving money efficiently is as hard as making money efficiently. In Abernathy Holdings, that's the goal, right? Where we're creating a Berkshire Hathaway basically for profit. And all these people said, hey, here's my money. We don't do dividends. It's a long-term outlook. And we're just growing for profit. And they just trust me to make the best decisions possible with very low, actually really no management fees. I just get a salary. And they love that
Right.
compared to other syndication deals and other investment products. So once I was done building that up, and now that that's a machine and we don't need any more capital for that, then I started hearing guys saying, hey, all this money you made me, I want to give it away. Like, help me with that. So that's why I opened
Okay.
up the Abernathy Foundation. There is no fees. I don't make a dime off of it, but I treat it as a conduit to help people efficiently give money. I mean, you can give money to a guy in the street or whatever you want, but giving money efficiently is really tough. So I got to know Unseen. They fight human trafficking and they're out of
Right.
Fargo, North Dakota. They actually accelerate the fight. So what I love about them is they actually find local partners across multiple countries and then they invest in them, teach them how to raise money, give them the materials. So every dollar last year, for example, that they invested into a local group in these various countries, they turned it into a $9.75. So in
Mm.
theory, it's a 975% return on our dollars donated, and then those dollars went to the cause.
Right.
And
Yeah.
what I love though too is I made a trip to Thailand and it was life changing. I mean, the fear in these kids' eyes. This is a place where there's 18-month-old kids getting taken to be sex trafficked. I mean, it is crazy. And
It's
then I
horrible.
went and met these partners that were changing these kids' lives. There was kids, now they've been doing it for so long. There was kids that were pulled out at 18 months old or 6 years old, and now they're graduating college in Thailand as a doctor. I mean, their
Mm.
lives have just been changed, and that's the new future. And to kind of sum it up, a buddy of mine, he had a nice exit and post COVID,
Right.
and he started up something called Calling Guardians.
Right.
And so that's kind of where I'm really pushing podcasts and just any friends is, a lot of companies allow employees to give money, right?
Right.
But his model's cool. It's employees show up every day, and the employer donates $1 per employee. So the employer does $1 per day per employee, no matter what. That's what the employer does. So as long as that employee shows up to work, there's $1 every day going out the door to this cause. Okay.
Yes.
But the employee has the option to match if they want. So now it could be $2 a day per employee. So it's very simple,
Mm.
frictionless. It's amazing. So that's where I've always told people, like on this podcast, for example, I've done this before. I'll offer it again. The first 200 employees that are signed up to this podcast, our foundation will match $1 per dollar. So it'll be $48,000 a year. We'll match it. So we've been doing a lot of that, and I'll do it again on this one. It's just awesome just seeing the change. So
Okay. That sounds really a worthwhile cause, and I applaud what you're doing.
thank you.
Um, Okay, so what's your view on the importance of having a mentor, and what's been your personal experience with cultivating that relationship?
Mentors are huge. I think you should have a celebrity mentor that maybe you won't meet. Obviously, if you can, it's great. And then you should have a mentor that is someone that you can in person talk to and be with. So for me, my advice to people is always make sure your mentor aligns with your goals. What I mean by that is if you want to be a billionaire, you better not have a millionaire mentor. If you want to be a millionaire, probably don't have a billionaire mentor, right? Because their ambitions and goals are different. They don't align. If you want to
Right.
be a teacher, don't have a millionaire mentor. If you want to be a musician, don't have a doctor mentor, right? So align your goals with what your mentor's done. And that is not only financially or success and in career, it's also who are they as a person, family man, are they fit as a person? Like whatever, all the goals as a person, who do you want to be as a whole, not just one
Right.
thing? So first off, make sure you pick your mentors correct. And then, yeah, just never be afraid to do it. So my mentor, Warren Buffett, he's my celebrity mentor. Never met him, but I know everything about him. But my in-person mentor, I cold called. So Gary Tharaldson, I cold called him 10 years ago to his secretary. He's again, the billionaire in North Dakota. He's in his 70s. He didn't know me from Adam. And I just made the call. And I called
Right.
probably 100 other people that I would want to be my mentor. He was at the top of the list. And he called me back. And now we have a
What was
relationship.
your initial pitch to him of what you're seeking?
Yeah. So initial pitch to the secretary was, hey, I was just called their office. I said, Gary doesn't know me. I said, I think I was like 20 or 19 at the time. And I just said, I want to get to know Gary. I don't need or want anything other than his advice and knowledge. I said, because at 20, I was managing $20 million. And I just said, I just really want his advice and guidance on where he thinks I should go. I want to learn from his mistakes and
Right.
successes. And I just really wanted to just have him talk to me and just listen. And that's really all it was. There was really no ask at that time other than just, and then it turned into we were meeting up every other week. And then it was a friendship. And then now, yeah, now we're partners. So it evolved.
That's a great story. Okay, so my final question to you is, what advantages does self-storage have over other asset classes, in your opinion?
Yeah, so I like simplicity. That's my big thing. I'm a farm boy, so I love how storage is very simple. Every building we build is our cost is about 15 million because we've vertically integrated our process. So we own our own construction company, equipment dealership, garage door dealership. We own the product. We don't build for anybody but ourselves. I mean, we own the product, asset, or dirt to door, and we hold it.
Right.
So we build them for about 14 to 15 million, and they're worth about 20 to 25 million at stabilization. And
Mhm.
that is one employee in that facility. So I love that. Employee per net income per employee head is really important to me with our verticals and for our assets
Right.
and self storage. The other thing is capex. Once we build these things, they really don't need a whole lot the next 20 years. Unlike in a hotel or an apartment or whatever it might be, there's a lot of wear and tear and new carpets and walls and sheetrocks, and that's an issue. The other thing I like about storage is tenant laws. Tenants have more rights than landlords in most states and growing. In self-storage, it's stuff. If you don't pay, we overlock your stuff and we auction it off. It's very simple,
That's a
and
very
there's
good
no
point.
government that can get in the way.
Yeah.
And the final thing, and there's a lot of things, but the final thing is I like brands. So my mentor, Gary Tharaldson, has built 500 hotels in his career. And they're all Marriott or the big brands. They're not Tharaldson hotels. He owns
Right.
them, but they run them. He runs them, but they brand them. Well, in storage in 2017, for the first time in storage history, Public Storage, Extra Space, CubeSmart, right? The Marriotts, the Hiltons of storage, for the first time allowed people to use their name and they would run it and you could be the owner. We jumped on that bandwagon. We were the first ones there. We were the first 100 to sign up. Everything we build is public storage. They run it, they brand it, we just own it. And their fees next to nothing. That's how you scale. I think a lot of people try to swim against the tide and manage this and manage that for a couple extra bucks. It's like, what's the point? They have the
Right.
algorithms, they have the brand. Just own the thing. That's where you make your money and develop it.
Right. Okay. Well, thank you again for taking the time. I've learned a lot, and I appreciate it.
Thank you.
Hopefully, we could have you on again sometime in the future.
Yes, thanks so much.
All right. Take care.